Welcome, 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 welcome. Let me just get this. Let me just get these links out and then we can go straight into it. 1970, 10, 18, 20. Okay, here we go. Da, 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 da. That's the first solution that I need. Okay. Yeah. So as always, guys, welcome. How you doing, my man? Yo, how you doing, brother? How are you? UK, welcome, welcome, welcome. We are back with another live stream. I do apologise for not being so active. I mean, the markets have been relatively slow. There hasn't really been anything happening. We took some positions. We're still holding. We've been holding for a couple of days. So, yeah, really not much going on. Now, we'll go through all the dynamics in terms of kind of the reasoning behind the price action. Again, those that are with us, we have given that explanation, that description out for you guys. It's pretty clear and simple. Especially also ahead of this Fed interest rate decision as well as Fed speech later on this evening, 6 o'clock UK time. Okay. Now, I mean, we'll go through everything really. We've been getting some trickle bits of data coming in. We got some UK inflation data today, this morning, and I mean, things aren't good over here. It's quite clear, especially if you're living over here. I mean, you're definitely feeling it somewhat and seeing it, that's for sure. But yeah, inflation's pushed back up essentially. So yeah, that's not good news at all. But yeah, let's go through everything from top to bottom. Bear with me. Okay, so where should we start? Let's start with the data that we've got today. Okay, so UK core CPI month on month 1.2%. Okay, previous minus 0.9%. So yeah, we're showing signs of actually coming down. Now we're pushing back up, right? Core CPI year on year 6.2%. Okay, previous 5.8%. Right, so PPI, core PPI outputs year on year actually came down. CPI year on year 10.4%, previous 10.1%. Okay, CPI month on month. So this is headline. Sorry, 1.1%. Previous minus 0.1%. Yeah, I mean PPI has come down, which okay, fair enough. But yeah, obviously CPI is pushed back up, so we'll see. When do we get the Monetary Policy Committee's meeting? Bear with me. I think we should get the MPC's meeting tomorrow. So, yeah. So, Bank of England MPC tomorrow. Okay. And we also get UK's interest rate decision tomorrow as well. So, you never know. It could be the case that we get that 50 basis points. And yeah, that's not going to look good. That's for sure. So what does it mean for the crypto market? So I mean, the UK, it's kind of a little bit separate. I mean, it's still a very large economy. Okay, so it is going to impact. Obviously, it's got a massive financial sector, so again, it will impact the dollar somewhat, or impact. It will have kind of a knock-on effect to kind of the ECB, the European Union, as well as the US, right? So if things look worse or they're worsening over in the UK or the EU, for instance, again, that puts pressure on the dollar. Okay, so yeah, it's not exactly good news for crypto. But essentially, I mean, the big news for this week really is that interest rate decision from the Fed later on this evening. But yeah, just take it. I mean, the UK is it's a different ball game over here completely, really. Um, yeah, it's a different ball game. There's a lot that's going on over here. That's different compared to um, kind of Europe, as well as, I mean, the US is doing its own thing in terms of the implications. Okay, but yeah, just there's a knock on effect. There's a domino effect essentially. Okay, um, so that's your news for this morning. I mean, for the rest of the rest of the data that we got, isn't really majorly important. Okay, it's mainly the interest rates there. We do get some US jobless claims, so some labor market data. And then we also do continue with some more data coming in on Friday. So we'll get that continuation of data throughout the week. But just remember, I mean, today, this evening is a very big day. It could, I mean, again, as explained, depending on what the Fed says, we could potentially either get a huge breakout, up or down. Okay, it really does depend. Now, obviously, we've had quite a lot happening recently, so yes, things are changing behind the scenes, if that makes sense. Okay, so obviously we got all of these implications with these banks. Credit Suisse over here in Europe or Switzerland, for instance. Okay, so yeah, things are slightly changing. They're showing signs in terms of a potential need for central banks to actually pause on interest rates, because these banks are actually having kind of the credit facilities kind of squeezed and put pressure on. So it's kind of one of the components in which the banks actually make money off. Okay, and if, I mean, mainly the problem with the banks have come to light and have had the problems that they've had, it's due to poor management essentially. Okay, but they've come and shown through because of the very restrictive kind of monetary environment that they're in. Okay, or kind of the West is in essentially. But yeah, so I mean, we've gone over this in the previous updates. In terms of, okay, 0.25 is what to expect. Okay, I don't think we're going to deviate from that. Okay, so expect 0.25, and then we'll see what Jerome Powell says. Okay, if there's any changes in what he's saying, because there hasn't. Now, there's a good chance that maybe something changes because of everything that's gone on. Okay, so again, this is why there's a little bit more pressure in terms of, okay, we need to listen out. There's a little bit more emphasis placed on this speech, okay, especially with how the markets are, well, what the markets have gone through, okay, with everything in terms of the banks, in terms of the escalation over between Russia, Ukraine, as well as kind of Russia, China, and the West. Okay, so there's definitely escalations there, and there's even more pressure. Um, so yeah, there's even more pressure on markets because I mean, if anything really does escalate over with the Russia-Ukraine situation, um, yeah, I mean, markets it's going to turn into a complete risk-off market. Everything's just going to be sucked out of equities, Bitcoin. It's all going to put into very much a safe haven. So just do bear that in mind. Damn, when Powell speaks, there are dumps and pumps while he does. Yeah, 100%. Um, so I mean, we're in a few trades here, but essentially, if we can maybe get out, I think the 0.25 will come in. Markets will. I mean, it's going to be a little bit choppy, but essentially move in an upward direction. The speech starts, and then we'll start moving down on the expectation that maybe Jerome Powell comes out with something different that's a little bit more hawkish. That's normally what happens in on the interest rate decision as well as the FOMC speech. Okay, yeah, we'll see how things kind of play out. But I mean, Bitcoin, as you can see, there's nothing much has happened. Okay, Bitcoin is pretty much unchanged. Um, Now the altcoin market is saying a little bit something a little bit different. You're seeing a little bit more choppiness in the altcoin market, partly due to your Bitcoin dominance. Okay, seeing this little bit of a pullback. You see this pullback from this key area of resistance. Okay, so it's kind of rebounding off this area of resistance at the top of the range. Okay, now when Bitcoin makes kind of these little movements and your Bitcoin dominance is kind of pulling back from this key area of resistance, you'll see these altcoins kind of moving a little bit more, okay, which has been the case. Especially, obviously, we took some of these trades. We've had to widen our stops because, I mean, look at what Bitcoin's done in terms of price movement. Absolutely nothing. But when you look at these altcoins, the altcoins have been moving a little bit more. Okay, so yeah, it's just the dynamic that it's currently in. Now things are actually moving a little bit heavier to the downside than on the upside. Okay, so that's something that kind of we have noticed. Um, so yeah, I mean, obviously we've had to widen our stops, which isn't the most ideal, but sometimes it has to be done. Okay, um, so yeah, 0.25 is to be expected, and then it's essentially what is said in that speech that kind of has changed. Again, as mentioned before, what you're looking for is potential switch up in the overall terminal rate for this year. Because what markets have priced in is an increase of 0.25 today, and then a pause in May. Okay, that's what they've priced in, and essentially that will switch up. Okay, because if Jerome Powell says, okay, got more work to do, we're going to continue with interest rate hikes, and we're going to increase our forecast for the overall terminal rate for this year. Okay, what is that telling you? That's telling you, okay, essentially we're going to have to push interest rates above the expectations or the current expectations for this year, which just means, okay, we should be expecting more and more interest rates, okay, past May. Markets have also priced in a pause. Actually, no, sorry, a decline in interest rates. So they're expecting a pause come in May, and then an actual turnaround in interest rates come June. Okay, so markets are very, very, very optimistic right now. Very optimistic, which could be a major, major problem. Okay, because if anything happens, anything switches up, and the Fed comes in and starts and continues to push in interest rates back up, yeah, that's not been priced in for. You will see a much larger sell-off in the market. Okay, simple as that. So just bear in mind, if things don't play out the way that the markets are pricing in and expecting things to play out, that's when you start seeing these massive moves in the market. Okay, when your expectations or the market expectation is very far from reality. So just bear that in mind. Now, we did send out an update the other day, and we mentioned, don't be fooled and don't FOMO into this. Okay, realistically, I mean, everything that's been going on, if you watched even a little bit of news, okay, you can't tell me that things look good. They don't. They're so far from looking good, which this isn't going to be sustained. It's simple as that. The only way, I mean, is if the Fed, the Fed's expectations and the market expectations go hand in hand. In terms of, okay, actually pausing on interest rates and actually moving interest rates lower. Okay, which again, the Fed's inflation target is 2%. Okay, and we're far from that. I mean, the inflation for the UK, for instance, this morning has gone back up. Okay, for the EU, again, same thing. Okay, normally you do see a bit of a knock-on effect. Now, the Fed also increased its balance sheet, okay, by 300 million. Okay, we did send out that post the other day. What does that mean? Okay, when you're starting to, so they've been going through a cycle of quantitative tightening after the quantitative easing from the pandemic. Okay, that quantitative easing basically essentially that's pushed inflation up. The reason why we have had such an increase in inflation rates. Okay, now the way that they've done it, so to bring that inflation back, is by tightening on monetary policy. Okay, so they've increased interest rates. Okay, making the cost of credit more expensive. Okay, so they're kind of restricting the amount that is spent or the money flow in the economy, and they've switched from quantitative easing to quantitative tightening. Okay, but as mentioned, they've increased their balance sheet by 300 million. Okay, partly due to the banks. So yeah, obviously that's going to put inflationary pressures on the US economy. So yeah, there's no real reason for 0% at the moment, especially with the Fed wanting to return inflation rates back to 2%. Okay, we're still very, very far from that 2% target. Okay, now it could be even the case that there might reach a point maybe in a few months when we get a little bit more data. Okay, depending on what the data comes out to be. But it might be the case that the Fed has to maybe give up on the 2% target and push it to, push it higher, 4%, 5%. Okay. Now, if they do that, now it's a whole different kind of worms right there. So yeah, there's a lot that could happen essentially. So we'll see how things kind of play out. Okay, so today is important. That's for sure. But going back to my point, don't FOMO into this. Okay, things aren't looking good. And there's still a very, very good chance that we move right back down. If anything, guys, this is a perfect area to really start to ramp up in terms of sell side pressure. Okay, this is your key area on Bitcoin. If you're looking for a midpoint, okay, where there's a whole load of resistance, this is it. Okay, very strong previous support on your chart. Okay, that's where your volume is at. Now, if those sellers, if we get in very nice price action, we push up and then we just start wicking from the top, and seeing a strong sell side reaction. Yeah, things are going to make a decent pullback. And what I'm essentially looking for is a quick turnaround. I don't want this very slow, relatively low volume movement. It's not. It's essentially a healthy correction. What we've been getting, we haven't actually seen a full turnaround. So yeah, this is where you want it. Okay. Now, in terms of actual TA, let's actually touch on TA because we haven't majorly touched on. Morning, let's get it. You're all right, Ryan. How you doing? Welcome, my man. Yeah, so lower time frame, TA. Okay, we are still expecting that move, that breach. Okay, we're not seeing any real sign of a deeper pullback here. The sellers, I mean, look at that volume that we've got here. The markets don't know how to kind of react here at the moment, so they're holding off on taking any positions. Hence why we're getting such low volume. But again, there's no sell side. Okay, we're still moving very positively. Okay, so expecting that push, 29k, maybe see a little bit of a rally as we get closer to that interest rate decision, as well as that FOMC meeting, and then whatever is said, or maybe the actual decision, if it's a 0%. If it's a 0%, I mean, we'll get the move past 29, closer towards 30 to 32, much sooner. Or depending on what's said in the FOMC meeting or what's not said in the FOMC meeting, we might get that little bit of a rally. Okay, so we've got a little bit of a range. Our first target is 29. And then after that, depending on the TA and what is actually said on in terms of the fundamentals, the next range is between 30 and 32. Okay, so yeah, that's what we're looking at the moment. So we'll see how things kind of play out now. Again, as mentioned, Bitcoin dominance is at its resistance area. Okay. If we start pulling back, okay, so if we start pulling back, so from this level, we start making a bit of a deeper pullback, maybe towards that 100 moving average, right? Okay, you're going to see much more exacerbated or exaggerated moves in the altcoin market. Okay, thank you for the follow, guys, as well as the likes on the stream. So essentially that's meaning, okay, Bitcoin's dominance or market dominance is falling. The altcoin market is taking more market share. So whichever direction Bitcoin moves, okay, so if this rebounds, pulls back, and Bitcoin breaks out and moves up higher, what do you get? You'll get a much more large moves in the altcoin market. So you'll see much larger pumps in the altcoin market. Now, normally the dynamic that happens is Bitcoin will make the move first. Okay, so what you'll get is, okay, Bitcoin makes that move first. Okay, Bitcoin dominance, okay, pushes towards this resistance and then starts to pull back as Bitcoin starts to slow down. Meanwhile, the altcoin market is making moves, but they're not those kind of huge moves. Okay, when Bitcoin finds its kind of resistance, okay, and it starts to maybe structure up, okay, to make that next breakout, what you will get is when Bitcoin structures back up, okay, after its breakout, and Bitcoin dominance is pulling back. That's the time where you see the altcoins really start to move up on when Bitcoin makes kind of these little moves up here, bam, bam. That's when the altcoin market really starts to break out. Okay, so Bitcoin will always make the first move, and then the altcoins will follow. Okay, so just bear in mind, it's always worth touching and keeping an eye on Bitcoin dominance. If you trade crypto, okay, it's essential. It really is essential, and it will tell you a lot of information. Okay, so yeah, 29. Okay, depending on what happens, depending on what's said or not said, we could be looking between 30 and 32, and then maybe finding very strong resistance, and then boom, we might be coming all the way down. I am still holding on to or still expecting, shall I say, a strong move towards and past this kind of previous level of support. Okay, I'm still expecting, and I still got on the cards much more kind of blood and much more red to come in the market. This is, for the way that I'm reading it, this is simply just a stronger bear market rally. Okay, still, I mean, we're getting good amounts of volume. Okay, we are, but at this time of year, especially, I mean, Bitcoin halving is next year. We're still so far away from it. Okay, that's, yeah, things have got to come down. Investors, this isn't cheap enough for investors to buy. Like, it's 16 grand. It's, yeah, and no investors are going to be buying here. Okay, 28 grand, no chance. It's just not happening. So I mean, we were ranging and accumulating for a period of time, but yeah, this is. I'm still looking at a move to about 12 to 10. That key area that has been widely spoken about. I'm still looking for that. Okay, so I'm still looking for that move to come down before we actually really begin that move up. I mean, look at this reaction down here. Okay, that's not a bottom. Really isn't a bottom. Where's that? You got to get that instant reaction. Okay, something like this where it makes that strong dip, and then you get that very quick buy side reaction from that bottom, and really setting the tone of the bottom. Okay, so yeah, I might be wrong, but from what I'm reading and what I'm looking at, okay, still expecting more red to come. Okay, this has been a very nice move, but I mean, just volume is tailing off. It's looking weak. Um, so yeah, we're still yet to get strong sell side. We've not got it. So yeah, that's what I'm looking out for that turnaround. If we do get it, just expect things to really move heavily if we get that sell side. Okay, and again, as mentioned before, sell side, that's much larger, like volume that really pushes up highly. Okay, there is a lot of buy side pressure. Okay, so you're going to need a lot of sell side to really kind of liquidate these longs and really kind of switch the sentiment over. Okay, but this is your point. Okay, this is where things should, where the sell side should come in. Okay, if it pushes and closes above this level, then okay. I mean, it looks like the bear market rally is going to be it's going to be more sustained for a bit longer. So yeah, we'll see how things kind of play out. Um, yeah, I mean, there's a trade on the cards. Okay, so there is this, either move at 29. Now it's either 29 or pushing towards 30. Just bear in mind, you got to compensate for the choppiness in the market, especially ahead of the interest rate decision and the Fed or the FOMC speech. So you're going to have to compensate for that in terms of widening your stop. Now, it could be the case so you just place a smaller margin. Okay, if it comes down, set some orders to average yourself in as prices kind of move down. Now, I mean, there's a bit of a trend line here, so essentially you want it to stay to that point. Just bear in mind, you could very much get overextensions here. So be careful of that, okay? But yeah, if we break through that trend line, we close above, beneath it, essentially you're probably looking at a move towards this previous structure here, if not much lower. Again, really does depend on what's said today. But yeah, we'll see how things kind of play out. We haven't touched on the dollar index, so amongst everything that I've said, okay, again, so we had our first point here, okay, if you remember the TA that we had here, we had a box here, this was the second one, and then we had our third one, okay. Now, as you can see, very, very bearish, okay, staggered, and it looks like we're going to go deeper into here, so you got two areas at which you're looking for a rebound, okay. So it could be the case, okay, we come here, if we start rebounding off here, you probably see things kind of switching over a little bit on crypto as well as equities. But it could be the case, okay, if the buyers still look weak in this zone here, probably see a very short pullback and then a continuation back down towards that next area of support. Okay, so now you got at least two areas at which you're looking for support and buyers to come in on the dollar index. Just bear in mind, obviously, for those that don't know, obviously, the dollar and risk on assets move in an inverse relationship. So it's always worthwhile as well keeping an eye on your dollar. Bear with me. So yeah, you got your areas of support. This is going to come deeper into here. Okay, so that should, as this falls down, okay, we should get that nice push in Bitcoin prices. Okay, we should see that push towards 29, maybe a little bit further past it. Okay, then if this starts to find strong support and starts to rebound, okay, we might get resistance at the top or the local top on Bitcoin, and we start making a bit of a more of a pullback. Now, there is going to be volatility around this Fed interest rates as well as the FOMC speech. There always is, and there is quite a lot of pressure on what's said and what is done in today's decision and speech. Okay, so yeah, just expect choppiness, just expect volatility. Let the decision come out, and then you got to give the market a little bit of time to digest it. Okay, there's always choppiness. It'll go up, it'll come down, and then it'll level out, and then go in its direction as we go through the speech and kind of what's covered. Okay, it's always the case. Remember, guys, those that are just joining us, feel free to message us in the chat any TA that you want us to go over. And obviously, we've just covered crypto. Bear with me, and we'll touch on kind of the other markets, your FX, your commodities, your equities. It's not a problem. Just give me 2 seconds. Just looking at something, and then we can kind of dive into everything else. Okay. Now, I mean, we opened a couple of trades on oil and gold. Yeah, things. It's setting up structure. It didn't go our way, unfortunately. So again, we've just taken a little bit of a pause and letting this decision get out of the way, and then we can kind of look at taking some positions in those markets. So let's see how things kind of play out. Give me 2 seconds, and we can have a little look at what's happening elsewhere. Okay. Okay, so yeah, dollar moving down. Let me have a little look as to. Here we go. So yeah, So we took a short somewhere around this region here, pulled back, and it just rebounded. We wanted to hold this level. It pulled back to 618 and just continued moving up. So there's positive structure here. We looked for a turnaround potentially at this point here. Fell to found support at this previous structure just here. You see, and then we moved back down. But just look at this. Okay, look at how the volume just completely dies off. Okay, we're ranging just here. Let me get rid of this. Got this order block here, so I mean, could be the case that we make either we stick to this point here, or you actually push a little bit further, tap into this liquidity here, as well as that 200, and then actually start moving back down. As you can see, we're actually ranging here, so you got a bit of structure to play to at the moment. I mean, just stay a bit, you gotta stay patient here. Hopefully we find some resistance here. Now this is where, I mean, we're moving up, right? And we're getting a complete volume divergence here. So, yeah, we could get a nice turnaround back into structure. So just gotta be patient. There'll be another trade or potential trade on the cards. If we break, we're just looking for a retest of this point and a move back in that direction. Okay, so at least we got a little bit of structure to look for and play with, which is always nice. Go over to gold. Now, we had gold moving up a little bit more. Now, obviously, that's clearly not what's happened. We were looking at it holding at this point here. It actually broke, and we're kind of moving. Well, we're at this structure here now. See, that's where the liquidity is currently held at. Again, volume is kind of tailing off. Again, markets, the overall markets are kind of holding off, okay, and just letting the Fed do their thing, and then kind of have a little bit more direction. Okay, at the moment, markets are okay. Are we getting 0.25? Are we getting 0%? And okay, how in line with our expectations are the Fed? Okay, essentially. So yeah, the markets are naturally going to hold off a little bit. But this is your level of resistance. Now you got that 200 just beneath. Okay, could come down to that. But again, just looking for structure at the moment. Okay, now it could be the case that we just hold, and then rebound and push towards back towards structure. This obviously we got a head and shoulders. We broke through the trend, the neckline, and moved down. There is a little bit more space for things to run up into, okay? So just bear that in mind. But I mean, it looks like we're just structuring up here, okay? So there's trades on the horizon for gold as well, okay? We just got to let it structure up a little bit more before kind of making a decision on things, okay? Let me have a little look at what we get in here. So tomorrow we get the Frank's interest rate decision. We got Bank of England's interest rate. We got US building permits. We got US jobless claims, and we've got the yen's CPI. Okay, so we got potential to capitalize on a few FX trades. That's for sure. Straight from the morning. Okay, so we got Swiss francs interest rate decision. Okay, again, this is going to be relatively important. Okay, it's going to be a relatively important interest rate decision because of what's happening with Credit Suisse. Okay, so there's going to be a bit of volatility with any of these kind of Swiss franc pairs. Bank of England's interest rate decision, again, an important one. We've just had a higher reading of CPI. And obviously we get the MPC speech as well. Okay, again, important because inflation's back up. So what's Andrew Bailey going to say on that front? Okay, so yeah, I mean there's some nice opportunities in terms of looking at some FX trades tomorrow. Again, we'll have a little look in the morning ahead of that London Open for any potential trades. But yeah, it's worthwhile kind of looking ahead and actually knowing where we could capitalize on some news. Yeah, US building permits, US jobless claims, so a little bit more labor market data. Pretty sure jobless claims, the previous jobless claims actually came in lower. Okay, which again just showing signs that labor market's tight, or continuing to be tight. Okay. Yeah, I mean Friday there's a lot of opportunity as well. UK retail sales, Spanish GDP, French PMI, German PMI, UK PMI, EU PMI, US core durable goods orders. Okay, so again a little bit more data to come in. I mean, whilst we're here, we may as well. I mean, there isn't going to be a great deal of potential trades. Again, markets are kind of just holding off. Now, we might get something come New York Open again. It's about 45 minutes away. No, a little bit longer. So we've still got a bit of time. Let's have a look at what we are getting in terms of data next week. Now, remember, next week is the final week of the month. Also, I mean, those that are new to trading, right? Understanding trade sessions. Okay, when are the most volatile times of the day? Okay, so understanding that is going to cut down the time on your screens, as well as being able to give you structure into your trading day. Okay, so you can plan. Okay, when am I supposed to actually lock up potential trades? When am I ahead of the volatile time of the day? Right. So you've got your trade sessions in terms of daily trade sessions, but then you also, in terms of your monthly structure, there's structure. Okay, normally I mean the start and the end of the month. Okay, there's the opportunities that arise are less than in the middle. Okay, normally the middle of the month is the best time to capitalize on and trade. So those that are kind of new, that's something to kind of bear in mind. Yeah, that's your time of the month is kind of the weeks in between your first week of the month and your last week of the month. It's difficult to trade. Okay, so just bear that in mind. It's something useful. Okay. Now, in terms of data next week, it's pretty clear. I mean, you got, it's more, by the looks of it, EU data. Yeah, yeah. Okay, yeah. A lot of it's just EU data, CPIs, PPIs, GDPs. Okay, so you got core PCE prices from the US on Friday. next week. Okay, that's probably your biggest day, really. You also do get GDP as well from the US Thursday. So Thursday, that looks a bit Thursday and Friday are your big days. But you get little bits of data kind of coming in here and there. Um, da, 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 da. Hush money. Okay, 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 okay. Might as well have a look at the equity markets as well. Um, Looks like we're pushing back up. Let's have a look at the Nasdaq. Nasdaq's normally always kind of a bit more advanced. We're at resistance. It's interesting. But I mean, yeah, the structure. We're holding on to positive structure, so I am looking at a push towards 29, and then maybe a pullback back in structure or an actual continuation. But I'm looking at 29 being the next move. Um, at this moment in time, it's more likely to push and break up towards 29 than break down. But just bear in mind if we do break this trend line here, yeah, things. I mean, there's a good move to the downside on the cards if we do break through here. Probably looking somewhere around this region, 26.6, somewhere around there, 26.8. Um, so I mean, we'll see. Again, you're going to have to get some sell side to make that move. Um, mm, 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 mm. Yeah. It's going to be an important decision, that's for sure. Yeah, that's true. It's a big decision, that's for sure, guys. Big, big, big decision. Um, yeah. Let's see. It could potentially get a little bit more. I mean, again, the structure on oil, we're ranging, we're at the top. So, I mean, as you can see, volume is tailing off. So, could get a nice move back down. Even to the kind of your midpoints, about 3% move on oil, which is a very nice move. And this is looking weak, 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 weak. Oh. Very weak, so very, very, very weak volume, completely tailing off. RLC was looking very nice the other day, just here, building up on that structure, made that break. Very volatile coin, that's for sure. Still holding. Some little look elsewhere. Right, bear with me, guys.
but what do those projections say about what the terminal rate is? And I think that's going to be the big surprise.
Betsy, you think that they're going to increase those dots? They're going to increase the projection of where the
My
terminal
camera
rate
went off,
ends
so
up,
let's get it back
despite
on.
some of the turmoil recently. What's going to be the justification for that? Are they going to double down on this idea of inflation and that we still haven't gotten restrictive enough, despite signs of credit tightening that has been accelerated over the past few weeks?
Well, the way I interpreted the comments was that the expectation was that inflation would come down more slowly than they had expected. And the dots come from expectations of inflation. If you remember, there was a lot of discussion in that press conference. And at one point, Chairman Powell said, my forecast is different than yours. If your forecast is right, your rate projection will be right. But if my forecast is right, then
Yeah, I
your
mean,
forecast is going to be
this
wrong.
is a trade to look
I
at,
think
really.
it would be a mistake to not remember that, not pay attention to that.
No, I
Betsy, just
mean,
one final thing. One thing we've talked about at the
it's
moment
just not
is the
ideal
Fed
risk to
advising
reward.
what we now know when it comes to financial.
Um,
When you watch
so
these
yeah,
comments,
I
Betsy,
mean, you
what
can
do you
either
think is it that knows things that we don't know
maybe
when it
here it's
comes to
not too
financial
bad.
system?
I think you will find that he certainly knows things that we don't know. But
That's a
whether things
bit
come
better. I
down,
mean, if things
I
come
don't think
down,
so. Again, his
then
credibility
it's
is
either
shaky.
average, continue up, kind of positioning and move this. Ideally, you want it to
What's
be,
the
I
strength of the
mean, a
banking
bit
system?
lower.
Right now, we
So
are strong
if
banking.
you're going to be on top of
Um,
things and manage the trade
this
correctly,
is
then you can
this is
set your stop
very
loss
much a
at
liquidity
this
issue,
current level.
and it goes back to
If things
what
come
I
down,
said
just add a little bit more margin, move
as
your
as
stop
the sentiment
stop loss.
has
Give it a
been.
little bit more room. Again, you have to compensate for the volatility of the market. Okay, you're going to have to compensate for it.
I don't know how much it's really that different. I mean, they get a lot of information, and you have a staff that compiles that information and reports it out on a regular basis. The banking information is going to be coming through the supervisory activities in
But
the
yeah, okay,
Fed.
right.
And my guess is right
We'll
now,
see how things kind of
the
play out.
supervisors are
We're
looking
not
at
too far off
what
from the New York Open.
liquidity risk management looks like,
Let's
what
see what we
systemic
can
risk
get. Give me
management
2 seconds. I
looks
shall
like,
be
and what is
back.
capital look like? Because you can plug a temporary liquidity hole with new borrowing that the Fed's doing, and that will keep the banks from having to sell the securities that they own. But if those deposits are gone forever, if there's a shift in the industry from the smaller banks to the larger banks, and it remains permanent, then that's a problem for the smaller bank portion of the industry.
Betsy, this was wonderful. I'd love to do this again ahead of the next Fed
Yeah.
decision. Thank you.
All right.
Betsy Du, thank you, the former Fed governor. Joining us this morning, looking back to '08 and maybe some differences, some similarities.
I thought that she was brilliant there, and it was really interesting to hear her insight. And what she said there, that the biggest surprise might be in the projections of where the terminal rate ends up. And they might stick to their earlier comments, and that perhaps they just have a different view than the market. To me, that's pretty significant stuff.
That's out of consensus. Let's put
Agreed.
it that way.
But with a pretty informed view
Sure.
of the thinking of the
We'll
Fed.
catch up with the former Fed vice chair a little bit later. Looking forward to get Rich Clarida's views on this as well. Alicia Levine of BNY Mellon's going to join us next. First Republic just distracted me just for a second, down about 8% this morning. Good morning to you.
Welcome back to a special Miami Open update for Bloomberg TV and radio. From Tennis Channel, I'm Mary Coscarelli. Carlos Alcaraz heads to the semifinals
Right.
tonight. The eighth man to complete the current Grand Double after lifting the trophy in
Yeah.
2019.
Let's see what we can get here,
Alcaraz faces the
guys.
path to the final. He could renew his rivalry with Jannik Sinner in the semis.
Da,
And
da, da,
we'll
da,
also discuss all
da.
the action exclusively live on Tennis Channel.
Hello and welcome to the Risk Opportunity, a series brought to you by Bloomberg Media Partners and Lloyd's Broadcasting. I'm Danny Houston, a financial analyst and broadcaster with more than 20 years' experience covering business and finance. We're living in an age of unprecedented risk, but for well-prepared companies and investors, risks can become opportunities. Listen to and follow the Risk Opportunity wherever you get your
Ba,
podcasts.
ba. Yeah, everything's just loading. To be honest, there isn't.
You're still seeing
That'll load.
Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please, do you want me to go there?
Tom Keene, Jonathan Ferro, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance.
We're seeing the sell-off continue to accelerate.
Subscribe today on Apple, Spotify, Bloomberg.com, or wherever you get your podcasts.
Yeah, I was just looking for that long on Bitcoin, really.
From cell phones to
So
smartwatches,
got a bit of
is more connected than ever.
a trend line there as well.
Toasters now have the capability to connect to the internet. As innovation and investment in digital infrastructure continues to increase, technologies like 5G and the Internet of Things are growing exponentially. Visit globalxetfs.com to discover these themes and more for your portfolio.
The possibility of lung cancer can be pretty scary, especially if you're one of approximately 8 million current or former smokers at high risk. That's why SaveByTheScan.org wants you to know they developed a breakthrough low-dose CT scan that can detect lung cancer early, and it only takes 60 seconds. You stop smoking, now start screening. For an easy quiz to see if you're eligible, visit SaveByTheScan.org. It could save your life. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Whether you're an in-house counsel or in private practice, Bloomberg Law gives you the edge with the latest in AI-powered legal analytics, business insights, and workflow tools. With guidance from our experts, you'll grasp the latest trends in the legal industry, helping you achieve better results for the practice of law, the business of law, the future of law. The difference is Bloomberg Law. Learn more at BloombergLaw.com.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing me.
Very, very, very slow price action. That's a bit unfortunate.
Years have passed. I still had that moment. The hard part was determining that I was going to do it. But I definitely didn't do it alone.
At age 30, with the help of a mentor,
Um,
finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Remember the last time your family visited the forest? It's a place of wonder and imagination for the whole family, where stories come to life. And it's closer than you
some
think.
potential nice structure here on gas.
Make the forest
See if we hold here, maybe move back up.
at a local park near you, or find one at discovertheforest.org. Brought to you by the
Coming up to that halfway point.
and the Ad Council.
That could be the case that we actually move a bit lower.
Broadcasting 24
Rebound.
hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio.
We're not going to be at a 2% inflation reading by the end of the year.
The recent data just don't show much slowing, and I do think that is important to the Fed's decision this week.
The market certainly is worried that we reached a point where central banks are constrained to hike.
For us to go to solidly 25, potentially nothing, and then a cut is completely based on systemic risk.
We shouldn't panic if we see them pause. Personally, I'd like them to pause.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
6 hours to go. The Fed decides. Chairman Powell in the spotlight, live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Equity futures just about unchanged on the S&P 500. It sounds like a simple decision as 25 or pause. It is so much more complicated than that for this FOMC.
We just heard from a former Fed governor that it's actually not going to matter 25 or pause. What's really going to matter is where they see the terminal rate and if they
Yep.
increase
See,
that.
just exactly as we said, guys. It's that terminal rate. Is it going to be pushed up higher?
It's not just about making the call 25 or pause. Got to get the statement right. There's a phrase in there, ongoing increases. Does that go? Got to get the forecast right, the press conference right, the tone of it. As for the forecast, 5.1% is the median dot for 23. projections right now. I think a lot of people out there at the moment, even if they're a hike or a pause, they think things are going to stay unchanged for the median 23 dot.
But that would be a change in and of itself because the signal was that it was going to go higher.
Sure.
So the signal was that we were dealing with inflation that was hotter than people previously thought, and they would have to deal with that. If they take that back, they have to explain that. Well, then, do you think that what we've seen over the past couple of weeks with banks materially brings down the path of inflation, materially adds to your tightening in a way that you're going to recognize in your dots?
The brilliant Alicia Levine is alongside us today here in New York. She's got a line, Powell has no good choices today. There are no good choices today. I'm just going to whip through the price action and then we'll get Alicia's thoughts on it. Equity futures right now unchanged on the S&P 500. Yields up by a single basis point on a 10-year 362. We've talked about the journey of the 2-year since the Fed last met from 4.1% all the way to 4.2% with a lot of zigging and zagging in between, Lisa.
It's going to be tired. This journey's been long. It's been tumultuous, and we've been all long.
You don't
the
sound
ride
like
for
someone
it.
who slept either. You feel bad for the front end of the yield curve.
Look, you gotta bear with us because we've all been up since for the past week and examining all the. Well, it never ended, and we're dealing with head-spinning realities, right? All of the conversations.
Let's see if we can get something elsewhere. I mean, markets are very slow at the moment. We're about just over an hour away from that New York, the official New York Open. Pretty sure it's 1:30 or half UK.
No good choices today.
No good choices today.
25.
We did 25 because.
Okay, yeah. So the UK moves back an hour on the 26th. Now I know the US has already done that earlier on this month, so hence everything's had to shift an hour back. Yeah, 12th of March it moved back.
Sometimes the messaging can be really complicated. I would look to Christine Lagarde, and I'd look to the inflation number in the UK this morning, as you were talking about earlier, as to signals of why we're going to do 25 today. And as to the dot plots, I think the dot plots pretty much stay on track here for those reasons. I think Christine Lagarde managed to message very well that they're keeping the two separate and can keep it separate. And I think that's what the Fed ultimately is going to do today as well.
Let's take the headlines from Lagarde earlier.
Yeah.
There's no trade-off between price and financial stability. We will not entertain trade-offs from the primary objective. What does that look like if Chairman Powell repeats exactly those same words later in the news conference?
So I think you keep ongoing increases in the statement.
Okay.
If he keeps to that kind of, we're going to keep the two separate, and in your mind you need to keep this thing separate, then I think you keep the ongoing increases with the open-endedness. I don't think the dots change, but you do keep the ongoing increases. But being open to that the Fed has
Just need that rebound.
necessary to deal with the financial stability issue. And those two things will be separate. In the end, as we've seen all over, inflation on the way down has not been linear. And I think opening up the dovishness that the market may want to see risks that other piece of it. And I think Lagarde really showed the way to how to capture this right here. So I would suspect that he's going to separate it as well. Now, did something actually happen in the real world 2 weeks ago with the banks? And I think the answer is yes, right? In the real world, credit contraction has likely accelerated. So let's take a step back and talk game theory, because that seems to be what we're all doing right now to try to game out what they're signaling versus what they're going to do versus what they know versus what you believe. And I wonder if, as a market participant, you think that Jay Powell has less credibility, not only in having the authority on what they're going to do, but having any extra visibility into the path of a market that has been highly indeterminate. So I think Jay Powell's credibility is intact here. He's been very single-minded on the inflation issue. There was some talk earlier in the other press conferences talking about inflation 11 times, but I think ultimately that the pivot was real, and I think the pivot is still there. And I think the thought that the Fed actually does have the tools to understand the financial stability issue and what's happening with the banks is a very real and true thing. And so if they hike today, it is a signal that they think they ring-fence this and can prevent further deterioration. So
if you say that there really has been something material that has happened in the economy, what's your investing change as a result?
Right, so that's the big question, right? We talk about the economy, but in the end, we have to invest our clients' money. So our thinking on this originally was that the recession seemed to be pushed out in maybe to the end of 2023 into 2024. 2 weeks ago, when that inflation, all those inflation reads came in really hot, and the economy seemed to be on fire. What we said today is that this event actually changes that. The recession comes back into 2023. Earnings likely go lower. We're pretty low in earnings this year anyway. We're neutrally weighted on equities. We never really went for the full, disinflation is here, climb back in, hand over fist, get greedy, because we simply didn't think that this was going to be so easy to get out of. In the end, this is going to be a hiking cycle, the fastest in 40 years, 450 basis points today, 475 basis points in 12 months. How do you get
Here
out of
we
this
go.
recession without something cracking? Well, in fact, something did crack.
Yeah.
So, and that tends to be not just one thing. So when there's an issue in the regional
We're
bank,
looking good.
lending, and that's what happens. And as you know, more than 50% of the lending to various sectors of the economy comes from these banks with 250 billion or under in assets.
So let's work through the sequencing. Bank liquidity issues, credit issues because of tighter lending, recession gets brought forward. We can agree on the date when this really kicked off. February 8th, the Wednesday evening, overnight into Thursday. Wednesday, the 8th of March, 39.92.
See if we can get that push again. We're just going to structure up. Doesn't look like we're going to get some wild price action.
Regulatory authorities have ring-fenced this, that they've prevented further deterioration in the system, in the banking system. Had there been doubt, you would have seen more of a deterioration, but it simply hasn't happened. So the equity market is saying, look, the Fed and the FDIC and the regulatory authorities have done the right thing, and they've done it well. And the stragglers left will be dealt with.
All things being equal, then, is a slower pace of rate hikes and potentially fewer of them, which is what people have been expecting and pricing in, stimulative for risk assets?
It will be taken as such. It shouldn't be, but it will be taken as such. The market is on a hair trigger waiting for the pivot. Starting last July, it was the pivot, then we pivoted from the pivot, then we went back to the pivot, then we pivoted from the pivot.
It's nuts.
It's nuts. It's really nuts. I don't understand why that with the 6% inflation, the market is not understanding that actually the Fed is going to keep on hiking as long as they ring fence the stability issue. And they will keep on hiking.
We're missing a point, aren't we? We're just kind of not trading the recession. We want to trade the recovery to the recession we haven't had yet.
We want the trade after the trade.
Totally.
Right? There's been a different trade in the last couple of weeks. And the market wants the trade after the trade because it's all happened so fast. Think of how quickly those deposits left the bank, right? It was people on apps. So the systems move quicker, trading has moved quicker, regimes seem to move quicker, and the market wants to price it in before we get through the recession.
No joke, I think we've had 3 different regimes in the first quarter alone.
Just take a look at the 2-year yield.
I mean, we came into this year and it was all rate cuts, recession, then it was boom, no landing, more hikes, maybe 6, and now it's financial instability, pause, the hiking cycle's over.
And it's March 22nd. We haven't even finished the first quarter.
We haven't finished Q1.
Right. So the market keeps on pricing in the pivot. That's the key thing. We keep on coming back.
Exactly.
To the whole 3,800.
Worse is to come, guys. Worse is to come. That's exactly what I'm saying.
Between 3,800, 4,100, 4,200. It's going to be a very
I'll also get a full market update sent out. Okay. It won't be on here. But yeah, it will be out later on today. So let's get the Fed out the way first. Let the market do its thing, and then we'll get an update out, an update ahead for the rest of the month. Now, as mentioned earlier, we're not getting too much more data. We get PCE from the US next week. That's probably a big point. Apart from that, that's about it. So, yeah, this Fed's interest rate and FOMC meeting is going to set the tone for the next month, or between now and the next interest rate decision on May the 9th, I want to say. Something like that. So, see how things kind of hold up. Be interesting. But yeah, as mentioned, we'll get an update out. Okay, we'll listen in on that FMC meeting. Okay, it's an important one, and then we'll let it kind of digest it and release an update on it. That's what we need. We need that hot. Jerome Powell. We're looking good. We are looking good. Hash money. It's a nice £3. Very nice. This is looking good. Now, just bear in mind, obviously, I mean, the New York Open is not far away now, about an hour. Okay, so, yeah, things should slowly start to ramp up. Hopefully, we get a little bit of movement on that New York Open. And then I'm expecting maybe a little bit of a pause ahead of that FOMC meeting, as well as the Fed's interest rate decision. And then that's where the real volatility and choppiness comes in. So, I mean, we'll see. If we don't get any movement on that New York Open, we will kind of just stay patient and look ahead to the Fed's speech, really. But yeah, I mean, we're going to get this amount of movement today. So, yeah, I mean, last week was a very, very, very good week indeed. So, there's no need to rush into things, really. See how things kind of play out here. %.
Some people are looking for a pause. Goldman Sachs one, Wells Fargo another, NatWest, Credit Suisse making calls for a pause today. Other people say cut, including Nomura, Akata.
See if we can get that push. Nice.
No one else really seems to agree with, but that is a call, and it really bakes in this expectation that we're going to see other bank failures in the small to medium-sized region. Basically, how many others out there are dealing with the same kind of liquidity mismatch? On a larger sense, does it matter? What if they hike rates and nobody cares? Because it really has to do with the projections and the press conference.
There was some language that Marko Kolanovic of JP Morgan used earlier this week in the investment bank. He said, past the point of no return. Have we done that now in the last 2 weeks? Have we gone past the point of no return? Or are we one solution away from talking about the things we were talking about 2 weeks ago, which is something I've raised repeatedly in the last couple of days, Lisa, because I don't know. You know where the consensus is right now. Alicia Levine sat there from BNY Mellon just 10 minutes ago, and if you're just tuning in, this is basically what
Come on then, let's get it. Look at that push. Nice candles. Let's go.
Which is the same kind of sentiment from Bob Michael over at JP Morgan Asset Management, saying even they are tightening credit conditions. They are the credit lenders, and they are definitely increasing the risk aversion. I do wonder, though, with headlines like what came out this morning, that mortgage rates fell to their lowest level in 5 weeks. On the flip side, when people start pricing out rate hikes and start pricing in cuts, how much does that ease on the margins in areas that were initially most affected by the rate hikes? I mean, these are sort of some of the dueling narratives, the dueling crosswinds that people are trying to parse through, and everybody has a different take on the implications.
I would put the emphasis on the supply of credit in the next few weeks and not the price of it, given how difficult it might be to actually receive it regardless of the price. I think that's going to be the interesting part. And of course, I know there's some association between what the price is and what the supply is.
Let's get it.
But the emphasis, if we're talking about tighter lending standards, that's what it's going to come down to.
That's a great point, especially because just recently there was a Federal Reserve survey that showed that the number of auto loan applications that were rejected rose to the highest levels going back to 2016 to 9%, more than 9%. This speaks to your point. Even if rates come down, people
Nice. We're looking good.
extend that loan at a time when they've got much more.
We are looking good.
That's going to be the difficult issue. Let's see how it plays out. I mean, this is literally 2 weeks old. 2 weeks old.
See if we can get that break.
Keep going. Multi-month process.
Those that are just joining us, welcome to the stream. Feel free to touch base with us in the chat. Ask us anything that you wish. We don't need to just look at crypto. We can look at FX, equities, commodities, stocks, anything that looks good. Okay, let's make money essentially. But yeah, I mean, see what we can get on crypto. Things are moving. We're starting to move as we edge closer towards this New York Open. Slowly but surely, guys. Slowly but surely.
This morning from Europe and the UK, the ECB President Christine Lagarde was just so punchy. We will not entertain trade-offs are the primary objective. I just can't imagine what the market would look like if Chairman Powell adopts that language in the news conference later. Euro dollar did kiss 108. It's come back down to about 107.95.
This is what I mean. Jerome Powell needs to grow some, basically, and really come in, because for the past several months, it's literally just been mixed emotions. It's just been the same stance. He continues with the same stance. The market continues with their same stance, which is very optimistic. Okay, and it has been the case for the past several months, right? So surely that should start ringing bells and say, okay, maybe I should say something else in my speech and stop reading off the exact same script that I've written for the past 5 months. Okay, so hopefully we get that today. There could be a large increase in prices or a very large decline in prices. It's a very, very, very important meeting. Bam, 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 bam.
Through the whole of today. I want to touch base with him now. Mike McKee joins us down in Washington, D.C. Mike, what's the focus for you? Because there are so many different things to focus on. I'm sure for you, like us, it's not just about 25 or nothing. It's about the statement, the news conference, the projections. Mike, what are you really focused on when this one comes out?
Well, there are a lot of different threads going, John. One is, of course, what they're going to do, 25 basis points or pause. But I think you're right. What Jay Powell has to say later will matter more.
Exactly. I mean, this is nice structure. Very, very nice structure. Could get a very decent breakout here. See how... Get rid of that. See how... You got this low here. And now look at this low. Bam. Nice reaction. Increase in volume. Could actually get continuation up, up, up. It's looking good, guys. Looking good. Bloody hell, man. It's hot.
different threads here because it's not just we don't know what they're going to do, but we don't know what it is.
Decent structure.
Mike, just quickly here, a lot of people are pointing to the fact that yes, it's the quiet period, but typically when facts change quickly in a quiet period, they're signaling in places like publications through certain reporters that can give you a sense of where they potentially could go if they're going to.
See how we kind of bounce off this key level of support as well. This is a good trade, very nice trade. Even if you're trading just to the top of these, kind of the structure here. Very nice trade. Very, very nice trade. Just need Bitcoin to start to follow through. Again, we're about an hour away from this New York Open, so things are going to slightly start to ramp up. Okay, as mentioned in terms of your dynamics, okay, I mean your Bitcoin dominance is at its key level of resistance. If we start to pull back, these altcoins are going to start to really ramp up. Okay, so yeah, if this breaks, Bitcoin dominance continues to pull back, some of these altcoins are really going to fly, and this is looking beautiful for that to play out. Nice support rebound. I mean, look at this: support, resistance, support. We got a higher low. See here how we got this low. We got this the creation of a higher low here. That's your instant reaction. Look at that volume, beautiful volume coming in. It's ready to go. All we need is Bitcoin to continue making those small incremental pushes up. Okay, and I mean, yeah, this is going to very nice increase. So I mean, looking good. It's starting to ramp up. See, go get that break. You get that break. Expect some of these trades bring in that profit.
Hello and welcome to The Risk Opportunity, a series brought to you by Bloomberg Media Studios and Zurich Insurance Group. I'm a financial analyst and broadcaster with more than 20 years' experience covering business and finance. We're living in an age of unprecedented risk, but for well-prepared companies and investors, risks can become opportunities. Listen to and follow The Risk Opportunity wherever you get your podcasts now.
Is your accounting and tax firm the right fit for you and your business? With so many accounting firms merging and expanding, are you getting the attention and responsiveness you need? You need established advisors who find opportunities in the current business and tax environment. Anshin is focused on providing the attention and fit you need to succeed. Let Anshin accountants and advisors map out a tax strategy and plan that ensures you're not leaving money on the table. Visit anshin.com/VIP to learn more and to contact us.
What I know about courage, She said sometimes you just gotta hold on and know we'll get through this. Mom, we are so high up. Hold my hand? No, you hold my hand. Here we go.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services, and the Ad Council.
When news breaks across the globe, Bloomberg Radio is there. From Asia,
in India, the G20 meetings have wrapped up with no consensus agreement to Europe.
It is a year since Russia's invasion of Ukraine began.
And anywhere in the world, news happens.
We're going to go live to Taipei.
Ryan Curtis has more from Hong Kong. In Davos, Switzerland, our David Weston.
Bloomberg's Tommaso Ebhart has more from Milan. Bloomberg's Simon Demican.
Milan. Okay, so yeah, we're seeing a little nice rebound. Let's see what we can get. Things are playing out slowly but surely, that's for sure. Yeah, this is looking very nice. Very, very, very nice. Let's have a little look at how our trades are doing. Where are my positions? Where is it?
Bloomberg Television, first in global
know what? Globally.
From New York to San Francisco.
Headlines involving Twitter.
From London to Hong Kong.
It has been a week of huge gyration.
The world turns to Bloomberg for market-moving headlines.
All eyes are on what's going on in the tech space.
The dollar really taking control here.
Bloomberg Television, the Bloomberg Business app, and Bloomberg.com. Check your local listings for the cable or satellite provider in your area. Payton & Regal is one of the largest independently owned global investment management firms with more than $118 billion in assets under management. We offer an array of tailored investment strategies, including equity, fixed income, and balanced portfolios, as well as domestic and offshore mutual funds. Independent since 1983, Payton & Regal is committed to providing customized investment management solutions focused on achieving our clients' financial objectives. Learn more at Payton.com.
145 over 92.
180 over 111. I had a heart attack and cardiac arrest and then a stroke.
Your blood pressure numbers could change your life. Lowering your high blood pressure could save you from a heart attack or stroke. If you've stopped your treatment plan, restart it or talk to your doctor about creating one that works better for you. Start taking the right steps at manageyourBP.org.
Now I'm, trying to get better, stronger than ever.
Brought to you by the American Heart Association, American Medical Association, and the Ad Council.
Welcome back. This is Bloomberg Surveillance. Jonathan Farrow off to his next property. Tom Keene off on vacation. I'm Lisa Abramowitz as we look at perhaps a bit of a fading after 2 constructive days in the market, the biggest 2-day pop since we saw the problems emerge from Silicon Valley Bank. Just a little bit softer here, basically range-bound as people try to understand what the Fed could do, but even more so what the reaction to
Come on then, Bitcoin, give me some movements.
has to do. You're seeing the S&P higher than it was before the Silicon Valley Bank essentially collapsed above 4,000. You're seeing the euro gain after some hawkish comments from Christine Lagarde and other central bankers in Europe. They are full speed ahead with rate hikes, according to a lot of the rhetoric that we've heard this morning. And the yield trend a touch higher, but the round trips that we have seen again and again really head spinning for people trying to get their head around where we are in terms of a disinflationary course or not. Jonathan Pingle among them. He is chief U.S. economist.
All right, so currently we are up 200% on Bitcoin and 83% on another trade and 133% on OP. So see how things kind of play out. We're nicely in profit at the moment, so see if we can continue. See if we can get that break. Very nice. We're looking good. We're looking good.
This is pretty likely to imply tighter credit going forward when credit was already tightening in the U.S. So, we'll be watching the same things you all are watching.
Out of 4 trades, we're down. Well, we're up on 3, down on 1. One's unfortunately down.
I've heard that the Bank of Farrow has an unlimited credit line out to 80%. I'm going to confirm that, and that is just according to
30%. Which I mean is okay. I can deal with that.
It's not a credit problem, that there's not necessarily the same degree of credit tightening that people are ascribing
Just need that push up.
to the market. That in fact there still is a very big inflation problem. On the ground, what data are you looking at for your compass amid the noise?
Well, we are still getting, real-time weekly data on everything from lending, mortgage applications, initial claims. We are getting regular, price signals from, big data sources, whether it's airfares, used cars, right? So there's still data that's coming in every day that's going to allow us to assess, what's unfolding. Pretty real time these days. I mean, that was one of the things we really learned.
Just gotta stay patient. Let the price action roll through. We're under an hour away from that New York Open, so let's see how things kind of develop. Things are looking good. Rebounding slightly. Yeah. Those that are just joining us, as always, guys, feel free to message us in the chat. Any TA that you want us to go through, let's go through it. You can also skip to the beginning of this live stream, and the majority of TA is all in there at the very beginning. Okay, so we have already covered Bitcoin, the whole story with today, Fed interest rate, Fed speech, okay, and what to expect. Oil, gold gone through, dollar index gone through. Some altcoins we've gone through. We've gone through the forecast for tomorrow. We get a little bit more data from other countries tomorrow. So there's a little bit of scheduling that we can potentially look at capitalizing on some FX trades tomorrow morning. We've also had a look in terms of the forecast for next week's news. Okay, so we've got core PCE prices from the US as well as some European data coming in. You get US GDP as well next week, actually. So a little bit of data. Just bear in mind, obviously, next week is the final week of the month. Okay, so yeah. But overall, I mean, this month has been insanely good. Very, very good month. Last week was crazy week. Now, understandably, obviously, this week we're not getting too much price action ahead of this Fed meeting, but hopefully afterwards, I mean, maybe for the rest of the day today and tomorrow, we get a little bit more volatility, then things kind of level off. Get a little bit of volatility at the beginning of next week. And then again, things slightly cooling off ahead of the end of the month and the new month, essentially. So we'll structure it, but again, those that got involved in this month's trades, amazing, well done. It's this month has really been good. Structure has been very nice. Now volatility is kind of the market dynamics for this week have kind of changed up, but as mentioned last week and even the week prior, very nice. Things moving very nicely to structure, playing out how they should, which just meant that, I mean, there was a whole load of trades that we could capitalize on. So yeah, we're I think currently at the current P&L, the third biggest month we've had on record. Something like 8,000% net profit. I think it's something like 23 losing trades, 50 something winning trades. So yeah, crazy. Can I enter now? Yeah, you can enter now if you want to. Okay, so I presume you've only just joined. So current dynamic basically is that's how we've actually got our stop set a bit wider. We entered this trade yesterday. We've got an entry a bit lower down, so the risk reward ratio is nicer. Now, if you are just entering now, and if you are going to be monitoring the trade, okay, you will. The thing is, because it's such a big day in terms of data, you will need to be monitoring the trade. If you're not monitoring the trade, stay out of trading today. Okay, it's simple as that. Now, if you are going to be monitoring the trade, okay, you can enter now. Yes, the safest place really to place your stop loss is at this current level. Okay, ideally you want to set it a bit lower. If price comes down, so if price comes down, you just average into your position, okay, and you actually move the stop loss to a safer part. You have to compensate with your stop loss. You have to widen your stop loss due to the volatility and choppiness that is expected today around this Fed interest rate decision, as well as that FOMC speech. As simple as that. Okay, so yeah, if you're not going to be monitoring the trade, just stay out and just come back tomorrow once markets have had time to digest the price action. The news and the interest rate decision. So yeah, that's how we got it set up anyway. It's just the safest one to trade as well is Bitcoin. The altcoin market is very, very, very choppy at the moment. So you will have to really be on top of things if you're in any altcoin trades. So again, your safest one is your Bitcoin, but again, it's you're still going to have a level at which you have to be monitoring the trade, because I mean we could break down and hold this structure here, and we're still looking positive. Okay, now this is our first target. Now there's our next target is 30k, but this is the first target here. So yeah, that's how we currently have it set up. If Jerome Powell comes in and says, okay, well, the interest rate decision comes in at 0%, you will see a very large reaction. Will probably blow through 29, push towards 30. But if we come in at 0.25, which is expected, then the markets look at what is said in the FOMC speech. And then again, it depends on what's said or what's not is said, or what not said. Which obviously will bring volatility into the market. So again, just expect a lot of choppiness. So hopefully that answers your question anyway. Just gonna have to be on top of things. If you're at work for some reason, or you're not gonna be attentive to the screen, then yeah, just play it safe, stay out. There's always another trade. Yeah.
On the Fed for the first time in a while today.
I don't think we'll see any dissent. The reason being is there is an issue out there whether the Fed thinks it's enough to pause or not. But I think they want to show unanimity on the Open Market Committee that we are in this together and we've worked out what our views are. I think if you had a dissent, then that raises questions about were there people who see something that we don't, or what's going on with the debate on the Fed. This is going to be a question of monetary policy, of whether inflation is going to be rising more, so we need to raise rates higher. It's going to be a question of bank safety, financial stability, and I don't think they want any divisions over that.
Michael McKee, thank you so much down in Washington, D.C. ahead of that decision from the Federal Reserve and the press conference at 2:30 p.m. Right now in markets, we are seeing some stability. However, if you look under the hood, some signs that perhaps some of the
Patience.
We've been covering First Republic Bank for quite a while and the ups and downs. We're now looking at a more downward trajectory, $14.90.
But this is I mean, it's a quiet day today, so sometimes it's like this. Sometimes it's not all action. I mean, majority of the time it's actually no action. So, yeah, that's why we kind of look at all of the markets, right? Crypto, if nothing really is happening with crypto and structuring up, we look elsewhere. There's always another opportunity, right? So yeah, it's good practice. But yeah, just expect there's going to be a decent amount of movement. Just look at how volumes just tailed off leading up to this decision. It's going to be a very important decision today. Very, very, very important. It's going to set the scene, really. I mean, yeah, as mentioned, next week, end of the month. It's also the end of the first quarter. So yeah, it sets the scene for Q2, really. What is said today, that's why it's so big. So we'll see. It's going to be an interesting speech, that's for sure.
money investigation
Mhm.
could make a decision as soon as today on whether there is enough evidence to charge Donald Trump with a crime. Republican Senator Cynthia Loomis says she does not see the case hurting the former president. In fact, as she sees it, there have been many allegations against him, but nothing seems to stick.
People either love him or they hate him, and that's the way it is now. I think that's the way it'll continue to be. So I
See
don't
what we
see
can
it
get.
as influencing this election.
Senator Loomis of Wyoming. A report says 26% of the world's population doesn't have access to safe drinking water. 46% lacks access to basic sanitation. The UN World Water Development Report came ahead of the first major UN conference on water in over 45 years. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Kind of a little bit of a push back up.
Hello and welcome to Risk Opportunity, a series brought to you by Bloomberg Media Studios and Zurich Insurance Group.
It's going to be interesting to see what happens with your dollar. Dollar's been moving down for a decent amount of time, so ideally push towards this area here. Just start turning around, bam, and then get that rebound, start moving back up. Yeah, we could get a very strong move in the market today. It's going to be a very interesting trading day later on this evening. That's for sure. Those that are just joining us in the stream, welcome, guys. Those that have liked and followed us again, thank you very much appreciated. But yeah, those that are just joining us, feel free to message us in the chat. Any TA that you want us to go over, feel free. Doesn't need to be crypto, can be FX, equities, commodities, even stocks. We're all good to go. So yeah, feel free, make yourself at home. Yeah. We're not too far, about 45 minutes away from that New York Open, so yeah, we should start seeing prices start to ramp up. We are seeing a little bit of more movement, which is nice. We're looking for a break towards 29. So we'll see how things kind of play out. We're in a few trades here that are looking very nice. So yeah.
Bloomberg Philanthropies partnered with business schools and journalism schools to provide postgraduate education.
Bloomberg dedicates almost all of its profits to transforming lives around the world. See how at bloomberg.com/face the data.
No company
So
wants to be involved in an international dispute. But when disagreements arise, you need expertise at your side. Take a closer look at ICDR, the International Center for Dispute Resolution, backed by the longevity and strength of the American.
yeah, like I said, I'll get a update out for you all later on. I will just let the market do its thing, get the Fed interest rate decision out, the speech, and then I can come out with an update after that, just summarising what was said, and kind of have a little look at the TA after that speech. It was going to give us a lot of direction into what to expect in the upcoming weeks, as well as next week. So, yeah, it's going to be an interesting one. We could very much see a very, very volatile move playing out. So, yeah, let's see.
Tremendous experience both in the Treasury Department, World Bank, and also in the banking industry extensively. David Malpass, who is World Bank President, joining us here in our studios. I want to start because a lot of people draw parallels to 2008. And given your experience there, you were chief economist, top-rated economist at Bear Stearns. Are there parallels to that moment and the one we're in now?
I think there are parallels and differences. The parallels are there was really a maturity mismatch at some institutions, and the Fed had been raising rates. Remember, a long period of rate hiking leading into 08, but then some big differences. What One is this time the discount window is available to the major institutions. That wasn't the case then. And so that gives some backstop, and you're seeing it really play out now. And another big difference is the Fed itself is buying huge amounts of duration, and other central banks are as well. ECB and Bank of Japan are holders of giant amounts of duration, which wasn't the case in 2008.
Want to see if we can get that break. See a nice reaction, so could potentially see a decent push up here.
That the regulators have to intervene. So today, I think the big issue is where is growth going to come from into the future?
Before we get to that point, I know you want to bleed that over into the rest of the world, which is an important point. I want to talk about the similarities. You talk about a liquidity mismatch. A lot of people draw the distinction. A liquidity mismatch is not a credit crisis, is not a credit crunch. But back in 2008, and actually I would argue earlier,
There we go. Getting a bit of a push here, aren't we?
led to a credit crunch. How close is that sort of direct parallel, this sort of direct bleed over into credit conditions?
As interest rates are held down, which was the case in 04, 05, 06, and
By the way, guys, thank you very much for the likes. Very much appreciated. Let's see if we can cash in on some trades. As mentioned, 3 out of the 4 trades are in profit. Yeah, they're looking good. They're looking good. We're going to cut our risk closer to that speech. Potentially just have the Bitcoin trade open. So we'll see how things kind of play out. I mean, on this New York Open. Okay, so we'll get the New York Open, see how things kind of play out. Let the markets kind of move. If we fail to move, then we'll look at that European close. Essentially, if we don't get any movement from the European close, we'll start closing the trades out. Yeah, the safe option here is just to let the news do its thing, and then we can go from there, really. So yeah, we're in profit, which is nice. So we'll look ahead at New York Open, European close, and then after that we get obviously the Fed's interest rate decision and speech, which is going to bring a lot of choppiness and volatility to the market. So a lot of the time, I mean, the other option is just move the stop losses to break even. Or get out, essentially. So we'll judge things on this New York Open, and then on the European close at 3:30.
So how much does that lower your projection for global growth, and how much has that lowered it even over the past couple of months?
We had lowered it substantially a year or a year and a half ago, recognizing that
But we're looking good.
the central banks were going to be raising, cost of capital goes up, so growth forecasts go down. So in the latest, what we've seen is advanced economy growth expectations have gone up some late last year. That's the U.S. and China in particular, as China lifted the embargo, the lockdown, and so as we're looking at it now, the growth is slow but positive in advanced economies, but in developing countries, not much investment taking place. That, I think, is the big challenge. I'll be giving a big speech tomorrow at CSIS in Washington, D.C. on the importance of private capital enabling. What are the tools and techniques, and the World Bank's in the middle of it.
I mean, whilst we are waiting, anyway, let's have a little look at some other. Let's have a look at some of these alts.
The stripping out of capital from some of the developing world. If the Fed does go ahead and hike rates by 25 basis points,
I mean, Link is up nicely. Ooh.
what kind of magnified effect could that have?
I heard you talking before. They'll be sending signals of what the prospect is. I think important is
Been ranging for a very, very long time on Link. Very long time. Let me get another chart up.
banks can be more involved or recognize they are affecting the lending that goes to small And so, are there ways with regulatory policy or with the
This is looking good.
duration purchasing of the central
See how we're accumulating now.
is that when central banks buy duration, that actually ends up slowing growth on average.
Yeah, we're looking good here. This is your range. This is your buying area for Link, guys. Now, there is this area here. If we get a large sell-off, okay, this could just dip into here, accumulate, bam, and then just really go. At the moment, this is the only smart money that's come in here. Apart from that, it's been very minimal. So essentially, you need it to come down to a lower level and start to see these kind of large influxes of smart money and buy side. But this structure is very nice. This is your buying range. Now again, I mean, it could very much dip. Now if you follow the Wyckoff structure, this could be potentially a spring scenario where you get that dip beneath. That's your indication, or that's where you see that buy side influx, and then it comes retest. That's your spring action, and then you accumulate and you break, essentially. But yeah, that's your very nice range and your buying range at the moment. So yeah, I mean, it's if you're looking to purchase some Link for your long-term portfolio, you want to start accumulating now. Save some for a potential dip here. Now again, I'm still expecting a large sell-off in the market, so this could very well just dip beneath this range here, tap into all of this liquidity here, and really start to see that buy side action coming in. As mentioned just a second ago, you're still waiting for a bit more institutional, a bit more smart money coming in to Link. Okay, so once you start seeing kind of the abnormal buy side coming in on the higher time frame, that's your indication why institutions are getting involved here. But yeah, you got structure, you got a nice structure to play to here. That's for sure. Now Link and Polkadot move very closely to each other. Okay, so just bear in mind. See, you're seeing a bit more buy side, that institutional buy side on dots. So yeah, something to bear in mind. This looks good as well.
What to be looking for, tell you the decision, still won't necessarily get you the market response. 2-year yields marginally higher after a whipsaw action. From New York, this is Bloomberg.
Need some price action. Alright, we're about half an hour away now from that New York Open. We're very close. Not too far away. We've been on this live for a long time.
We're living in an age of unprecedented risk, but for well-prepared companies and investors, risks can become opportunities. Listen to and follow.
Let's see what we can get here. Let's see. Those are just joining us, welcome, welcome, welcome. Feel free to ask us anything in the chat. More than happy to go through any TA, guys. Doesn't need to be crypto related either. It can be anything. FX, commodities, equities. Let's go. Let's do it. I mean, yeah, in terms of crypto, we'll touch base quickly. We're expecting that break towards 29. At the moment, obviously, as you can see, we are compressing into price. So we should see a move. We're starting to get a little bit of movement. We're about 30 minutes away from that New York Open. So things should start to ramp up a little bit, yeah. So, yeah, let's see what we can get, really. But yeah, welcome, guys. Again, feel free. Message us in the chat. More than happy to answer your questions. Yeah, it doesn't even need to be kind of TA related. If you got any questions in regards to trading in general, more than happy to touch base. Let's go for it. You are looking good. Looking good. Slowly but surely.
Get the news you need to start your day in just 15 minutes.
The crisis of confidence in the banking industry continues.
UBS agreed to buy Credit Suisse for $3.2 billion. Wake up with Bloomberg Daybreak, U.S. edition.
Chinese leader Xi Jinping has left Moscow, wrapping up a 3-day visit. March Madness on display.
Available now on your podcast feed.
Each weekday morning at 6 a.m. Eastern.
We will see more regulation of banks.
Subscribe to Bloomberg Daybreak, U.S. edition today on Apple, Spotify, and everywhere you get your podcasts.
What is dedication?
The thing that drives me every day as a dad is Dariana. We call him Day for short. Every day he's hungry for something, whether it's attention, affection, knowledge. And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I think the advice I would give is you don't need to know all the answers. The craziest thing was believing that your dad knew everything. So as a dad, you felt like you had to know everything. You had to get everything right. It's okay to make mistakes. As long as it's coming from love, then, it kind of starts to work itself out. I want him to be able to sit back one day and go, we worked together, we did a good job.
That's dedication. Find out more at fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
This is the story of a very special woman. Just a few knew about her superpowers. In a matter of seconds, she turned herself into a great mathematician. She masqueraded as a regular person at work, but as a superhero at home. Everyone knows her as Gabriella. I still call her Mom.
Your hero needs you now, and AARP is here to help. Find the care guides you need to help, complete with tips and resources at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. This is Bloomberg Surveillance.
We believe that the U.S. economy is going to stall even before these banking events happen.
Our base case both in Europe and in the U.S. is that we're not done yet on the hiking cycles.
The Fed will be thinking about how much credit tightening is going to be happening as a result.
Yeah, we're getting a nice price compression here. So we're either breaking up or we're breaking down. So either one way or the other. Now I do think we're going to get an initial kind of anticipation of a potential pause. So break. Should see a break. But again, I mean, we'll see. Consensus is obviously 0.25. Which, I mean, the markets are primarily expecting that anyway. Yeah, so we'll see. Hopefully we can get this push. This is kind of your next, this is your structure to play to.
Bloomberg Surveillance this morning is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more at getrefunds.com. Let's get some more color on that pre-market equity trading with Bloomberg Markets correspondent Kriti Gupta. Kriti, what are you looking at?
Well, some news in the financials here just moments ago, coming from PacWest, one of the major financials we've been watching in the wake, I should say, of First Republic and Western Alliance. PACW, the shares tanking here, down about 9%
in the pre-market. They're giving an update on their financial strength, saying it secured $1.4 billion from the Atlas financing facility, also saying it drew more than $16 billion from their federal facilities to bolster that liquidity story. So they also said they're not going to pursue a capital raise at this time, given, quote, depressed market prices for regional bank stocks. So really interesting to see PacWest finally break their silence on this. We've been waiting for a while to see if they were going to be the next shoe to drop, Paul.
Okay, stock down 9.4% here pre-market.
Yeah, a pretty massive move, and on Fed Day, nonetheless. I mean, how dare they?
Right,
Don't they know?
exactly.
Just kidding. Look, PacWest is a very important stock, and we're going to be monitoring it throughout the day. Let's get to some earnings news, though. Actually, we probably set the first there. Is your ticker. That one down by about 5%. It was actually higher in the pre-market. A little bit more optimism about whether a deal would go through. Now it looks like trading in sympathy with those PacWest headlines. So again, something that you really want to keep an eye on throughout the day, specifically when Chairman Powell starts speaking. Watch what PacWest and FRC does, because those are going to be really important stocks to watch. The other one we kind of talk about earnings here, Nike, NKE, down about 2%. They came out with great sales, great revenue. It was their profitability that hit. Classic story here in this earnings season. If you aren't showing that you are building on your margins or even holding them steady, you're going to get punished by this market, and that's exactly what happened, despite, like I said, that sales beat and revenue beat.
Yeah, a lot of retailers, as we've heard over the last couple of quarters, trying to really manage that inventory, the inventory to sales ratio, those types of things. Still having some challenges there.
Yeah, for sure. And remember, Nike has that major exposure to China as well. So the China question has really been in focus, to which they said, look, we're still expanding. The reopening has been a positive thing, but clearly the inflation issues and the labor issues still eating into those margins. Now, it's a shame Tom isn't here, but hopefully Lisa will enjoy this just as much as he does. GameStop, GSP is your ticker, up 52%.
Right, about 25 minutes away from that New York Open.
Look, their first profitable quarter in 2 years. This is a massive deal. The CEO
Not too far away now. Yeah, I mean, again, we're just waiting for that potential price ramping up, breaking through, at least making that attempt to push up. Yeah, we're just compressing. So we'll see what happens on that New York Open. And then have a look at, I mean, if we don't get anything on the New York Open, we'll have a look towards the European close. But yeah, more positively compressing. Volume is falling down. So it could go either way, really. It could go up, it could come down. So do bear that in mind. If you are in any altcoin trades, just bear in mind that obviously, I mean, this is going to play a factor, and that you're going to see a hell of a lot more choppiness in the altcoin market. Okay. So in terms of risk, if you want to take a position, you're better off just trading Bitcoin. Okay. Yeah, your altcoins are going to be very, very volatile. It's going to be very choppy. So yeah, just concentrate on Bitcoin if you're looking to enter anything. And just bear in mind that it's good. I mean, it's a big day today in terms of news. So you need to be on top of your trades if you're entering trades today. If you haven't got the time, just stay out. There's always another trade. You can trade tomorrow. You can trade later on. But yeah, you're going to have to concentrate on positions today. It's going to be a volatile day. As simple as that. That Fed interest rate decision as well as speech is important, very important. Just bear in mind, obviously, the end of the quarter is coming up. So this kind of sets the scene for markets. The next interest rate decision is in May. So we've got a month to look at data. And then obviously May comes forward. We get some more data coming up. But again, we do get that next interest rate decision. But yeah, I mean, markets are going to move on the data today. Looking at this hard and potentially pushing up. So.
is very expensive and tough to do. Or do they is the target really the regional banks, right? So the big banks that I cover have been gaining deposits. They benefit from being a safe haven, and the smaller bank, the community banks are fine, but regional banks.
It's fair to say we've been on live for a good amount of time. Yeah, guys, if you want a full breakdown, I mean, I'll get a full breakdown out post Fed speech and decision later on this evening. But if you're looking for kind of full breakdown in terms of kind of what to expect, what are you hearing out for? Just simply skip to the very beginning of the live stream. That's how we kind of structure the live streams. At the very beginning, we'll do the full market breakdown, touch on the TA, the fundamentals. So you have that at the very beginning. You can go and rewatch that and get that information at the very start, and then look for trades. Okay, so yeah, the action is after that market update. But as mentioned, anyway, we'll get a full breakdown later on this evening. It won't. I mean, bear in mind it's not going to be on TradingView. We don't do market updates on TradingView anymore. So do bear that in mind. We only do the live streams on TradingView. Right, things are looking a bit better here. Just need that rebound. Okay, we're starting to see things kind of push up a little bit here as well. This is starting to turn around, which is nice to see. Yeah, we're looking good. This is starting to make that move down. Come on, let's get it. Let's get it.
They just saw $27 billion go out the door. Are they going to have money to help me build my business?
And that is, I think, that the broader question, and I think that's why you bring a lot of the discussions of the Fed into the situation, because banks have been, they're dying. They've been dying to make loans. Part of the reason why we have the issues at these regional banks is that there was no loan demand, and so they were buying a lot of securities and not necessarily managing their balance sheet properly. But if you're having those deposit outflows and you have a big portfolio of bonds that you can't sell or don't want to sell because you take the write down, then you don't have the money to make the loan. So what happens is, Bank of America, JP Morgan, they're increasingly in these markets, right? And they will make those loans, but the spread that they'll,
Right, just bear in mind, about 15 minutes away from that New York Open. Very close.
Challenges that are out there in the marketplace. Allison Williams is a bank analyst at Bloomberg Intelligence. With our news in New York City, here's Michael Barr.
Well, Lisa, thank you very much. Former Vice President Mike Pence is discouraging protests if charges are brought against his former boss. However, Pence told college students in the media last night that if Manhattan District Attorney charges former President Trump, it will reek of politics.
The likelihood that if it occurs, it'll just further divide our country.
Pence also didn't exactly back Trump in the presidential race, saying that different times call for different leadership in America. Police in South Carolina are now reopening an investigation into the death of 19-year-old Stephen Smith. His body was found just miles from the Murdaugh family property in 2015. Reopening comes after former disgraced attorney Alec Murdaugh was convicted of killing his wife and son. Alec Murdaugh's son, Buster Murdaugh, says baseless rumors of my involvement with Stephen in his death are false. Chinese President Xi has wrapped up his
state visit in Russia. Yesterday, Beijing and Moscow released a joint statement about deepening cooperation, including in Ukraine. National Security Council spokesman John Kirby at the White House briefing says President Putin needs Chinese support for his war.
He's blowing through inventory. He's blowing through manpower. His military's getting embarrassed constantly. They've lost greater than 50% of the territory that they took in the first few months of this war. He needs help from President Xi, and that's what this visit was all about. Now, whether it results in anything, we'll see.
National Security Council spokesman John Kirby says Ukraine posed no threat to anybody, let alone Russia. Japan beat the U.S. 3-2 to win World Baseball Classic, and it was a classic. Live.
Here we go again, that move.
This is Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. Michael Barr.
Looking good. Okay, nearly all 4 positions are all in profit. We're literally okay. Now we're looking good. See what we can get. Hopefully we can get that push up.
And that's the reason why this headline about PacWest, one of the other banks, is getting so much attention.
Yeah, looking good. Let's go. Again, prices ramping up, which is nice. Just need to continue pushing.
It received a line of credit. It's decided not to raise additional capital after 20% of its deposits withdrawn since the beginning of this year.
Yeah, so that's significant. And again, that goes to the issue we were discussing with Allison. Do they have the deposits out there to fund loans to help their customers grow? And that's a challenge for probably more than just a few. We're going to have more on that coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 9:16 on Wall Street. I'm Karen Moscow. This update brought to you by Interactive Brokers. Interactive Brokers clients earn interest of up to 4.08% on the uninvested cash in their brokerage accounts. Rates subject to change. Visit ibkr.com/interest rates to learn more. U.S. stock index futures are steady. European shares rising as investors prepare for the Federal Reserve's much-anticipated interest rate decision. The pound rallying to a 6-week high after a surprise rise in UK inflation. We check the markets all day long here on Bloomberg. S&P futures are little changed. Dow futures up about 0.1%.
Looking good. We are looking good. This is looking like we could potentially make that break lower.
Down 5/30 seconds, yield 3.63%. Yield on the 2-year 4.22%. NYMEX crude oil is up 0.6% or 41 cents at $70.08 a barrel. COMEX gold little change at 19.5970 an ounce. The euro 1.0784 against the dollar. British pound 1.2265. The yen 132.73. Bitcoin is up 0.7%. It's around 20,000.
We are up nicely. All 4 trades up. See if we can get continuation. Just need that push up, up, up.
In Washington, D.C. So in Washington, D.C. is our own Michael McKee, International Economics and Policy.
Right, 12 minutes out from this NY Open. Just round the corner.
Bloomberg Economics is out with a piece here saying the Fed's kind of in a no-win position today. I mean, what's the message you believe that Fed Chairman Powell would like to convey to the markets?
Well, I suspect it's going to be sort of a dual message that we are on top of the banking situation and the banks in America are in good shape, and those that are not, we can handle, and don't take your money out. And 2, we are still focused on inflation, and we are going to bring inflation down. It's going to be a needle to thread on both of those thoughts, but it's not going to be, he can't go one direction or the other without upsetting
Come on.
somebody.
Looking good.
Looking today at the PacWest situation, I'm wondering whether, and we've been asking
Looking good.
for the past 2 weeks, whether they're going to give a nod to banking stress as a determining feature of the rate path that they go for.
I think they will give a nod to bank stress as a factor in the economy and emphasize that it's an unknown for what it would do to the
See if we can get a break. Now, again, as mentioned, what we're looking at is a move towards that 29. Okay, if we're able to get that, I mean, prices can stall anywhere. I mean, we can stall at 20, well, at this level here, 28,450. We could stall anywhere in between this area here. Why have we picked 29? 29 is a nice round number, but again, if prices look like they're stalling around any of these levels, we'll just close and then let the Fed do its thing. But yeah, we'll be closing nice in profit, which is always a bonus. But I mean, we're looking good. We are looking good. See if we can just get that ramping up, push towards that point. Now, it could happen on this New York Open. It could happen on this European close. Ideally, we want it to happen in either of those sessions, okay? Because following those sessions, we get that Fed speech, and there's going to be a lot of choppiness. So ideally, we want to be out. Let the Fed come in with its decision as well as its speech. And then, yeah, just watch, okay? And then look for new positions.
And I got something worse for you, Paul, that hasn't been really reported a whole lot. Yes, if you look at the minutes of their February 2nd meeting, the last meeting, there is a paragraph that says they discussed
9 minutes out from the NY Open.
reporting that Bloomberg broke this story originally about the San Francisco Fed sending a lot of messages to the supervisors there. New York Times and Wall Street Journal followed. But
still very weak sell side, yeah. Should be getting sell side coming in at that point. We're not seeing it right now, so let's see.
And if so, what did they do about it? So there's kind of a hole there at the top of the story that people will try to fill in today. Imagine Jay Powell saying that. And we'll get back to you on it. So I'm not sure we'll get a lot of clarity on that today, but it'll be interesting to see how he phrases it.
How much clarity are we going to get in the balance sheet? We've been talking about quantitative tightening, which suddenly became quantitative easing. Some people would say overnight with a $300 billion increase.
There you go.
This is a really hard thing to explain to people, and so there is this perception out there that the Fed went back to QE and that they might have to stop QT. This is really a different thing. These are banks putting some securities with the Fed as collateral for loans. They're taking that money and they're using it to shore up their balance sheets, to shore up the asset quality that they have. And they're not going to be using that money to bring credit to the economy. It's not like a bank taking reserves from the Fed in order to make more loans. It is a temporary balance sheet, keep the money in the vault, as it were, effort to shore up their finances, and that these last for at least the discount window stuff lasts for 90 days, and then they got to pay it back. So it's not really QE, and it really doesn't have an effect on QT. The overall impact of QT combined with higher interest rates is that rates go up, and so if the Fed has determined that rates have gone up enough, then they could say something about slowing or ending QT. But I suspect Powell will try to make that point, and I suspect a lot of people will still be confused.
Right. Michael, I just typed into my Bloomberg terminal dots.go. Isn't this a meeting where we get some updated dots out there that people pay attention to?
Yes.
Okay.
You can look at your dots go chart shortly after 2 p.m. and see see the new forecast. The interesting thing is you take a look at the dots from the December meeting, which was the last time they put them out, and the median was for 5.1%. But if you notice, there were 7 dots above that. Yeah. And you only had
Right, 6 minutes out. Starting to see a little bit of a ramping up, which is nice. See if we can get that break. Ideally, we want that break.
So it's very probable that we will see a move higher in the dots in terms of where they think the terminal rate is going to be.
Looking good so far.
To see if Wall Street cares. The funny thing about today is we have, for the first time in a very long time, we have no idea what the Fed is really going to do, and we also have no idea what Wall Street cares about. What is going to be the Fed decision or the Powell comment that really moves the markets by the end of the day? That's a complete mystery to me at this point.
Michael, how many reporters do go to the press conference? Is it a live event, virtual? How's this working now?
It's a live event. We don't do virtual anymore.
Nice.
The ECB does, but the Fed is all back in person. And there's about, I'd say, 20 to 25 reporters, or number of reporters from foreign news organizations who generally don't ask questions, but they're there. And all the major news organizations in the United States, including us, will be there.
Absolutely. All right, good stuff.
See if we can get that break.
In Washington, D.C. He will be at that press conference today. Again, that starts at 2:30 Wall Street time. The statement will be released at 2 p.m. Wall Street time. And, of course, Bloomberg radio and TV coverage begins at 1:30 p.m. Wall Street time. Michael McKee, international policy and economics reporter down in D.C. Looking at these markets, I guess it's no surprise. I'm going to call it out there because I'm sharing a studio with Lisa. The S&P is unched today. Unchanged.
Really?
Yes.
You know how I feel about that. Come on,
I know,
Paul.
exactly.
It's a long week. Be
It is.
kind.
So we'll see. We're going to have all this coming up. This is Bloomberg.
Hello and welcome to the Risk Opportunity, a series brought to you by Bloomberg Media Studios and Zurich Insurance Group. I'm Danny Hewson, a financial analyst and broadcaster with more than 20 years' experience covering business and finance. We're living in an age of unprecedented risk, but for well-prepared companies and investors, risks can become opportunities. Listen to and follow the Risk Opportunity.
Can we get that break?
Some bonds last a lifetime. Some bonds inspire confidence. And some you grow to rely on. These are the bonds worth investing.
Right, here comes that New York Open, guys. 3 minutes. And here goes Bitcoin. Here we go.
All investments contain risk and may lose value. Consult your investment professional before investing.
Not completing high school is more of a social thing than it was an academic thing. Even though these years have passed, I still have that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and
See if we can get a nice push.
There could be a lot more selling to come. Ours is too. Just getting some headlines I want to bring to our audience.
We also have the unknown of how much can financial assets take.
We have something else incoming.
The small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
With deep drop in Asian equities overnight.
U.S. futures also pointing to the downside.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets
Here we go.
1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste.
Come on, give me something. Make that push, make that break.
This is Caroline Hyde.
And I'm Ed Ludlow. Join us for Bloomberg Technology, a daily podcast focusing exclusively on technology, innovation, and the future of business.
We bring you the latest headlines from tech top companies and conversations with the industry's biggest decision makers.
We even have to show our own productivity gains. Cyber is a hugely important issue. It's extraordinary.
Getting a little bit of volatility, which is nice to see. So Let's see what happens for the next half an hour.
Your clients all have unique financial journeys, so why should their investment options be one size fits all? Financial Network, you gain access to a comprehensive range of holistic investment solutions that you can customize according to your client's
Alright, here we go. New York Open, guys. New York Open.
Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
Wake up and text. Text and eat. Text the beautiful friend you haven't seen in forever. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit stoptextsstopwrecks.org. A message from NHTSA.
Some nice buy side coming in.
From the Interactive Broker Studio, broadcasting coast to coast, Bloomberg 1130 New York, Bloomberg 99.1 Washington, Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, the Bloomberg Business app, and Bloomberg.com. This is Bloomberg Surveillance.
And that is the sound of the opening bell on Wall Street. Good morning. I'm Karen Moscow, along with Paul Sweeney and Lisa Abramowitz. In the S&P 500 is a little change at the open on this Fed day. It's at 4,002. The Dow Jones Industrial Average also a little change. It's at 32,576. And the NASDAQ is little change at 11,857. 10-year Treasury, little change. Yield 3.61%. The yield on the 2-year 4.21%.
Oh, come on, give me some movement.
0.2% at $69.80 a barrel. COMEX gold at 0.1% or $2.40 at 1960.70 an ounce. The euro 1.0788 against the dollar. The yen at 132.66. Something not little changed. You'd have to go to GameStop. It's up about 50% right at the open. And Paul and Lisa.
All right, Karen Moscow, thank you so much. We appreciate that. Tom Keene is on vacation this week. Good for him. He deserves it. Sitting in for Tom is Lisa Bromwitz.
Yeah, Paul, I've got to say, quite a week here with respect to either the banking issues or that we're expecting to hear from the Federal Reserve. Someone who's been really illuminating on this pretty consistently and has had a pretty consistent message is Michael Darda of MKM Partners. He is Roth MKM Partners chief economist and macro strategist, and he joins us right now. I'm curious about what you see as, Michael, the least worst option, I should say, for the Federal Reserve at a time when there clearly are still banking stresses in the system.
No doubt about it. It's a pleasure to join both of you. Honestly, I think the best option for the Fed would be to pause and not to hike rates here, but that's very unlikely because if you look at the Fed funds futures markets, I think there's about an 84% probability of a 25 basis point hike, and I think the Fed is going to look at that window as wide open, and they will deliver the rate hike in large measure because just 2 weeks ago, Fed Chair Powell came out with very hawkish congressional testimony, essentially saying that the strong January data, if it continued into February, particularly with regard to inflation readings, the Fed would be prepared to not only raise rates to a higher peak.
Yeah, I guess we're just going to build up some structure here. A little bit of previous structure, previous resistance into potentially new support here, as you can see. We can just hold that. We could ramp up and make that break. So we'll continue holding for now. I mean, if we start pushing towards 28 to 28, then we'll potentially look at, but I mean, prices can still come down, reaccumulate, and push right back up. So, yeah, keep an eye on things. Sell side's still very weak on the lower time frame. Let's have a look at what's happening here. Yeah, still building up some structure, really. Very weak.
fast forward, V-shaped recovery continues in the first two days off, and the Fed is forced to reverse course and go from egregiously behind the curve in early 2022 to catching up. 450 basis points of rate hikes in about 1 year's time. Haven't seen anything like that in more than 4 decades. And then in the second half of last year, inverted yield curves really across the board. Any measure.
Right, we want it to hold this level ideally. Start making that push up, which we are getting. So potentially build some structure here, make another attempt at breaking the top. Yeah, getting a little bit of a pickup on volume. So hopefully we can make that break. That'll be nice. That's my. Bear with me, guys.
Should not be a complete surprise, although to some it certainly has been.
How much have credit conditions actually tightened over the past 2 weeks in a way that they hadn't before?
Yeah, it really depends on what markets you're looking at. So in the high yield market,
hello.
from a historical standpoint, but the junkier areas of junk, if you will, have widened more. The triple C
I've been on the live stream for that long that the camera has decided to glitch. Are we back? Yeah, I mean, as mentioned, that's the area that you wanted to hold. We've got a nice rebound, so let's see if we can continue moving in that direction. Now, it could be the case that we just build up some structure here and then actually break. So that's now your level of support. A breach of this level means, okay, let's get out of these trades. We're going back into structure. Okay. So yeah, that's your low. That's the support you want to hold on to for a push back up and breaking through that trend line. It's got a nice rebound. So I mean, nice volume. So this is now the breakout point. That's where we want to push up and above. See what we can get. Here we go. This is where you got to be patient. Even though we got that pullback, came back into structure. Okay, tapped into liquidity there and got that bolster in buy side. So let's see if we can continue. See that push up there. That's your next level of resistance past this trend line. 28,445 or roughly. That's where the next level up, which we're kind of looking at. Okay, is price slowing down here? Is the are the sell sides coming in at this point? If they are, that's why we close the positions, take our profit, and yeah, just relax until the Fed interest rate decision. I mean, we're very nicely in profit right now, so even if we close here, it's nice.
Because markets have already priced in 25 basis points. So if they do that, that is not going to be a surprise to markets. But the dot plot could be a surprise, and Powell's tone and rhetoric could be a surprise. So those will be two things I'll be watching for.
Well, we were talking earlier this morning with the former Fed governor. She thinks that there's going to be a pretty big surprise in that statement of economic projections. That there will be, as you say, it's going to levitate. It's going to go up, as the Fed has previously discussed. So do people just ignore that if they say that this is just a signaling effort, that they're not truly going to do that?
Well, I think it's based on the best guess of the members at the.
Come on, let's get a move.
If the dot plot does levitate from here, I think it does suggest that they are a bit out to lunch, because more likely than not, we're going to see an ongoing aggressive tightening in lending standards, a fall in the neutral interest rate, slowing growth as we go into the summer and fall, if not recessionary conditions.
Got some decent price action here.
Pricing in rate cuts here, and I think the more the Fed does now, either with short-term interest rates moving up or the dot plot levitating, the more cutting they will have to do in the back half of the year. And I would watch for those expectations to intensify if the Fed just keeps trying to press its luck here.
Mike, in your earlier remarks, you said that the Fed was
Come on, give me a break.
Do you still feel like the Fed is behind the curve in reacting here?
Need a move.
So in early 2022, we had a booming
Moving up nice.
accelerating inflation, and the Fed, at
Come on, let's go.
still doing QE. So those three things didn't
Let's go, Bitcoin. Let's go.
very slow growth and low inflation. So the Fed definitely overcooked the goose here, and then they started moving rapidly. I think they caught up, mid-year last year, and now I think they are moving into restrictive territory. The problem for them is they're focused on coincident and lagging indicators, so the unemployment rate, payrolls, and then these measures of core inflation, deeply lagging indicators. And so if you're looking in the rearview mirror, you have no idea if you've gone too far. But the forward-looking indicators, the yield curve, money supply figures, lending standards, the whole gamut of leading indicators that come out of the Conference Board have all rolled over very hard. So they're telling us that the Fed is already in a restrictive posture, and with the banking crisis erupting, they need to be ready and willing to start moving.
Come on, push.
That has not happened at this point, and that's where things could really get messy here, I'm afraid.
All right, Michael. Thank you so much for joining us.
Getting some nice structure. Just need it to make a decent push up.
As we await the Fed decision, 2 p.m. Wall Street time today. With our news in New York City, Michael Moore.
Paul, Lisa, thank you very much. In New York today, security.
All right, looks like we got that 382.
Criminal court ahead of a possible indictment of former President Trump. We get the very latest from Bloomberg's John Tucker.
Trump said he expected to be arrested.
Still very weak sell side coming in on here. Looks like we could get that push.
The twice-impeached president may potentially be charged with falsifying business records connected to hush money payments. Yesterday, the courthouse at 60 Center Street was temporarily closed and searched after a bomb threat. A judge was about to start a hearing in another case over the $250 million lawsuit by Attorney General Letitia James against Trump. I'm John
Come on, give me a push, man.
Three-day state visit with Vladimir Putin. Chinese President Xi Jinping has left Russia. Putin hailed Beijing's proposals for...
All right, we'll give it another 18 minutes. We'll give it half an hour to do its thing. If we're not getting anything, let's get out.
One way to stop the hostilities is to pull Russian troops out of Ukraine, but short of that, Mr. Putin could stop bombing hospitals. He could stop bombing schools. He could stop launching Iranian drones into civilian infrastructure. He could stop the forcible deportation of young kids, thousands of them.
Alright, let's get out, yeah. I'm out.
North Korea has carried out yet another show of force amid joint military drills involving the U.S. and South Korea. The North test fired multiple...
Alright, we're out. Let it do its thing now. Yeah, I don't like it. Okay, yeah, we're out. Take our profit. It's a very, very nice amount of profit, so, I mean, we can't really moan, can we? What do we get? So, 248% on Bitcoin, 86% on APT, 125% on OP, and break even on XMR. Yeah, we'll take it. We'll let it do its thing. I just didn't really like that movement there. But yeah, okay, so I guess that concludes the live trading session today. Everyone that joined us throughout, thank you very, very much. Very much appreciate everyone that liked and followed. Again, very much appreciated. We'll see what happens on this Fed interest rate decision as well as the Fed speech. We'll let kind of price action do its thing, and then we'll come out and we'll post an update for all of you. Just bear in mind the market updates no longer get posted on TradingView, okay? Only the live streams go on here as well as elsewhere, okay? So yeah, guys, thank you very much. Enjoy the rest of your day. Just remember, if you're not able to be on the screens during that speech, just stay out, wait for tomorrow. There's always another trade. And yeah, see, things are turning around here. But yeah, peace, and I'll touch base with you all later on. Thank you.